would you say to somebody that's a current homeowner that maybe, they purchased 4 or 5 years ago, they got in with those super low interest rates and they think they're married to that house forever, but life happens and they need to move. What would be your advice to them
Yeah.
about
I think there's been
making
a
a
lot
move?
of conversations lately with some of our clients and folks that maybe are still sitting on the sideline with regards to these things, right? When life happens, there's life circumstances like we're right. So we've dealt with a lot of divorce situations recently. And I think that has to do with a lot of like consumer debt and just the economy and where it's at. But we've also had opportunities for folks where they're either moving up or moving down, right? So if you look at it, you're going to go move up in terms of a percentage increase when things correct, right? If it's a percentage and there's a larger dollar amount in your next purchase, you're saving money now to do it, right? Also, if it's not the right place for them and their family, they've either outgrown it or maybe they're empty nesters. It might be a great time to downsize as well for them because they have an opportunity to not compete with as many folks, right? As far as when they're going to list that house, if they can't keep it, we always talk. That's I think what separates our group is that we always talk to them. How can we keep that property? There's a way for you to do a HELOC or borrow a little bit of money to go to the next
As a fiduciary,
transaction.
that
Yeah.
should be your first question.
So I think most of our sellers, when they see that and they come from that, the guard comes down a little because they realize we're not looking out for our commission check, right? Our
Right.
pocket.
And I think, some of those things we talked about before for the move up buyer, I think a lot of people, there was a lot of equity growth. So, when you actually look at the numbers and you look at how much equity people have in their homes, and if they're able to sell and use that good chunk of equity, and then the fact that we talked about it being more of a buyer's market, you can get credits to buy the interest rate down even further. So I think it's very natural to just focus on that low interest rate that you have. Really, what the thing to focus in on is what's my payment going to be. And I mean, if you're moving up into a home that you really need for your family, if your payment goes up a little bit, you kind of expect that, right? I just think it's easy to kind of fall into that trap of assuming that, like,
I want my 3.5% interest rate,
when really it's like when you take the amount of equity that people have,
Yeah.
and the market that we have to be able to buy down interest rates, it's
Yeah. When the interest rates drops, the sellers will not be helping you with that anymore. They're going to have the power if they drop anywhere near that range again.